Guys, there are 33 stocks that I want to own. They all have great stories. But the question is, can I buy them for the right price where the story and the fundamentals make the most sense? In this video, I'm going to go over all 33 of these companies. Some of them I own, some of them I'm waiting for, and also the stocks that I currently have in my portfolio that are not part of this 33 list. Let's check it out. Now, guys, this is a list of some of the stocks I currently own. Sprouts, Intel, BTI, 3M, Target, Nike, Adobe, PayPal, all of these companies right here. One of these is an ETF, SCHD. I also own 2 ETFs having to do with gold. Now, why do I like these companies? Well, for the majority of these, I look at these as long-term great companies. I look at these companies saying, I think these companies are going to be around for a long period of time, and they do a great job allocating their capital. Now, which ones are the least sexy? Well, Intel has the biggest turnaround potential. It has been beaten up, hit an all-time high back in 2000 of $75, got as low as high teens recently. But I think based on the juice, it's worth the squeeze here because there's a lot of potential if Intel can get back to its previous revenue and previous profit with a great brand name that they still have. This could be a nice stock to add to my portfolio. HP, not a grower, but doing a great job buying back shares inexpensively, and they pay a pretty decent dividend. Now remember, I like dividends. Doesn't mean I want them to pay dividends, but I like the fact that I get this return from them. All these other companies, guys, these are all, this is my best performer, and previous Paul would have probably sold this by now saying, it's too expensive. I learned that lesson hard with Meta and Microsoft in the past where I sold them too early thinking they were too expensive. I want these companies to keep on running. Now, Alibaba, a lot of crap going on with Alibaba, right? A lot of crap going on with Southwest, a lot of crap going on with Target, a lot of crap going on with Nike. But I would argue that a lot of these have to do with just news recently. News is following the stock price. I still believe Southwest will be around for 10 or 20 years. And I think based on its current price and getting back to even a reasonable profit margin they used to have, this could be a high flyer. Alibaba, one of the fastest growing companies in the world. This, I think, will be a great performing company in the long run. And based on my reasonable assumptions about the future in our stock analyzer tool, I love owning that. Target got hit hard with theft. They were turning that around, closed some stores. I think they got a better grasp on that. Their same store sales were down recently, but I think Target's been around for a long time because when I talk to women, they still love Target. They love going there, and Target's doing a great job of making buying there easier, including delivery and pickup. And Nike. Can you imagine a company like Nike we'd be talking about saying Nike is dead? And I've actually heard that recently. I heard from several people saying Nike is dead. Okay, whatever. So all these companies here are ones that I own. Remember, don't buy any company because anybody in this world owns it. You need to understand a process. On this channel, we're trying to teach a principle-driven investing approach. What does that mean? 1, when we buy a stock, we're buying a piece of a business. 2, every investment's the present value of all future cash flows. 3, if we don't understand it, we don't invest in it. 4, we don't look at short-term price movements to determine if we're right or wrong about an investment. We look at the fundamentals, getting better, and the long run, seeing if we're right about the company. And the 5th one, and probably the hardest one to understand, is a great story, if you pay the wrong price for it, can be a bad investment. So for me, I want to buy companies that I think will be around for a long period of time. If they're going to be around for 20 or 30 years, and even they grow steady, if I pay the right price, I will do well. I don't need to crush the market to do well. That's why I've added SCHD to my portfolio. Now, with that said, a lot of these companies here, I think I have potential for 15 or 20% returns, and I'm not going to turn it down, but I'm going to be way more cautious in buying and only buying when it makes sense to me. But most importantly, all these companies probably going to fall over time. This market's very overpriced. I want to make sure that I'm ready to buy them when it happens. Now, guys, look at a company like Sprouts Farmers Market. Here's how much I don't pay attention to when I buy a company. I was just told, Paul, you started buying Sprouts in 2022. I didn't even remember that. And that was a bear market. But bear markets are when you start to get the best deals. All these companies here, we're now in a bull market. You better believe the stock market has another 40 or 50% pullback, crash, or whatever you want to call it, like it did several times in the last 25 years. These are all going to go down. And guess what I'll do along the way? I'm going to buy more. If you can't withstand your stocks falling 50%, you shouldn't own individual stocks. And guess what? Even with that, ETFs will fall that much too if the market falls. You have to be ready for that. Now, of my 33 stocks I want to hold forever, these are the ones I currently own. Most people out there would say, if you love the company, buy it. No. If you love the company and the price makes sense, you buy it. That's it. Never ever buy just on a story. You will probably not do very well. You might do well in the short run, but in the long run, it'll probably hurt you. These stocks are all companies I feel are going to be around for a very, very long period of time, if not forever. So because of that, when the stock price makes sense, I choose to buy. Now keep in mind, in order for stocks to fall, the story has to change on them. At every point I bought all these companies, I have been told on every single one of these, except for Sprouts, Paul, you're crazy. This company's going nowhere. Maybe so. But I have to hear that in order to get a good price. The question is, can I do my own analysis on it to understand that? Now, guys, here are some stocks that I own and are selling for a good enough price where I feel like I could buy more of it in 2025. And one of these is that SCHD. I'm buying this every single month and also selling puts on it every month to buy more of it. But as time goes on and these stocks fall even further, I already think that all of these stocks are selling for a price that makes sense to me. And I love it. In our community, sometimes I'll have people say, Paul, I don't think it's low enough for my threshold. I go, I love it. That's great. Understanding what your threshold is very, very important. I might be willing to buy Nike for an 11% return, but you might be like, well, Paul, I'm not independently wealthy. I got to get a 13% return. Great. Understanding that for yourself is what's most important. You know, we look at Warren Buffett. Warren Buffett's goal in life isn't to buy companies that he can make 20% returns on. Yes, he'll say that, but he has too much capital to do that. He can't move the needle as much. If he can find companies that he can make 10, 11, 12% returns on by deploying lots of money, he will do that. But back in the day, in 1950s, 1960s, 1970s, no, that was not his goal. He wanted to do much better than that. Now for SCHD, why do I own this? Well, apart from the recent years, I look at it and say, they pretty much match the market. But yes, it's paying a dividend out, so it's very tax inefficient. However, my goal is to never take money out of my businesses or my real estate. So I have 1,000 apartments upstairs, I have 7 or 8 businesses, and we reinvest all the capital. I use SCHD as a way of generating income for myself to live off of, because I've got a great stock account that I can sit there and live off that income beautifully. Same, adding it in 1 to 3% a year on options, and I can live a very nice life off my dividends and my options income, and that is my goal. Because I never want to take money out of my growing real estate. I never want to take money out of my growing businesses. I want to reinvest every single month as they grow and grow and grow. And what's my goal there? Maybe to sell it off someday, or maybe at some point we say, you know what, we're done growing. Let's just live off this cash flow. So guys, the reason I love talking about Nike is Nike is a company that I think has a great moat. It's a world leader. It has been for a long time, and it continues to do that, having, LeBron James, Michael Jordan as their 2 biggest athletes on lifetime contracts. How do you get around that? I think Nike's here to stay, and they're doing a better job of selling direct to consumers at higher margins. So I think the company's going to get better. But what's happened? Well, the company went from $180 a share to a low just last week of $70 per share. And people, of course, when they see that price drop, the mood has changed. When it was at $180 a share and we said we'd start paying attention under 100, people said, Paul, you're crazy. It'll never go below 100. Well, here we are. What made it go below 100? Perception. As stock falls, why is it falling? And then all of a sudden the news stories that justify why it's falling come to the top. So how do we use the stock analyzer tool? Well, guys, the stock analyzer tool marries the story with the numbers. You sit there and you put your assumption here for revenue growth, profit margin, free cash flow margin. All these assumptions are based on that story that are out there, but they're tangible assumptions. Now, of course, the future is unknown and we're humans, so we make mistakes. So we have our low, middle, and high assumptions, and we also have our final desired return. This is basically our margin of safety. I always put in 9 or 10% because that's the market return. But guys, you need a bigger return than that to buy an individual company. So let's see what I did for Nike most recently, because I think it's really important to understand what we're doing here with Nike. So first off, guys, look at this 20% ROIC. This means they're remote, and this means they get a good return on the money that's in their business. I put a mere 3, 5, and 7% revenue growth for the next 10 years. I did 10, 11, and 12% profit margin and free cash flow margin. And guys, it's a premium company. You can't assign a 15 PE or 15 free cash flow multiple to this company. I put in 20, 23, and 26. And again, my 9% no margin of safety return, hit the analyze button, and boom. I have a middle price of 60, high price of 118, middle price of 84. Based on today's price of 75, it's a 10.5% return, and that includes your dividend. So I'm looking at this saying, guys, what price did it need to go to? The great news about this is, if you truly believe these numbers, as the stock falls, this current price return will get higher and higher and higher. And can I ask you a question? Where do you think Nike's going to be in 20 or 30 years? Do you think it's going to be around? If you think it's around, do you think it's going to make more revenue and profit? That's the big key to investing. But it's hard to do that with all the noise out there. All the more reason why people in our community right here have great conversations, because they can support you when times look tough. Now, guys, you've heard me say this. Everybody has a different threshold here. In our community, everybody has a different threshold. People are in there in all walks of life. Some people are 15, 16 years old trying to learn about investing. Others are 60 to 70 years old, retired, and just trying to generate some extra income. Wherever it is, there's somebody in that community that's going to match your life. So if you've probably watched our videos and thought, let me join this, you've gone to the website and you see that we have a wait list. It's very important to us that we get the right people in our software. But our software today includes all of these up here, except for trading. It's a separate category, but stocks, real estate, retirement, economic data, everything. But behind the scenes, we're making changes because our goal is to make the software better and better. When I originally built the software, it was only for myself and my team, so we can continue to use it to help me make better investments. But as time went on, and people on the videos kept saying, how do I get that software? We made it for everybody else, and we have to make it more about you than me. So these changes are being made right now, but before they get made, join the software, lock yourself in, get all these tools before we separate them off into different categories and different prices. Get it all together, and you can test it out for $7 for the next 7 days. Guys, I assure you, this will change the way in which you view money. You'll become a better investor by sleeping better at night and having a much more relaxed feel about money. When you are relaxed and when you can make decisions when the market's freaking out, that's how you generate a lot of wealth. And in our community, people love big red days. So go to everythingmoney.com or click the link below, and I'll see you in the community. Now, guys, here are the companies I don't own. I used to own this one. And the reason this one bothers, this and Microsoft, my biggest mistakes in investing in my career. Why? Because I was buying this all the way down. I actually bought it on the absolute low of $88 per share, November 4th, 2022. And it got to $195 very quickly from there. And I sold saying, too fast, too quick. Let me wait for it to pull back. It never did. Same with Microsoft. I was buying Microsoft when a tech CEO told me they were dead back in 2011, 2012. I was paying $17 to $21 a share. It went to 60. I said, it's only worth 50. Let me sell it and wait for a pullback. It never, ever did. These are my two biggest mistakes in investing right there. But these are all great companies. And the three questions I ask when I look at any company like this is, will this company be around for the foreseeable future, 10, 20, 30 years? If the answer to that is yes, do I think the revenue and profit will be higher or lower than it is today? If the answer to that is yes, third most important question, can I pay a reasonable price for the company today that factors in that future, gives me an ample margin of safety that allows me to buy these companies? If the answer to that is yes today, then what am I doing? And that's the goal here with all of these companies. And guys, you look at these companies saying, these are all big brands out there. You know pretty much all of them. Actually, you know all of these. Maybe you don't know Otis, but they're the elevator people. Intuit, QuickBooks. Cintas, the uniform people. But these are companies that are all basically pretty boring companies. Yeah, Meta's exciting, Microsoft's exciting, Google's exciting, Apple's exciting. I get that. But the vast majority of these are not exciting businesses. Now, the great news is, guys, I have these all on my watch list. So if you look at my watch list here in our software, not only do I have them all on the watch list, but I have prices that when they hit those prices, they will trigger me to go in and do further investigation, maybe sell some cash secured puts, which allows me to get paid waiting for the stock to hit the price I want. But you can set the watch list price to immediately sit there and say, hey, go buy this stock. And we're working now on trying to link up brokerage accounts to our software that allows you to go buy immediately. Now remember, guys, Stocks can be on your watch list for a very, very long time. That's what I'm trying to teach here. You need to be patient. But that's why I want you having a lot of stocks in your watch list. That way, when things do happen, you're able to just sit there and be patient and wait. But when something strikes, you're ready to jump on it. Now, guys, we get a lot of guidance from you guys on videos. I want you to tell me, what are your dream stocks? Put them in the description below because it helps us guide for what videos to make next. Don't give me a list of 30. Give me a list of 4 or 5 companies you sit there and say, I would love to own this company at the right price. Guys, that principle-driven investing is so important. Be patient. And you want to see my original video on the 33 stocks I want to own, where I talk in more detail about each one, watch this next video. Thank you for your time.